China's central bank announces the initiation of outright reverse repos. The Reserve Bank of India maintains its growth forecast to 7.2% for the current fiscal year. And oil prices fell almost $4 a barrel after Israel's strike on Iran. Hello there, welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on key updates regarding pivotal economic trends and financial shifts. Thanks for watching. We start off with China, where the central bank has announced the initiation of outright reverse repos to enhance liquidity in the banking system and diversify its monetary policy tools. The People's Bank of China will conduct these reverse repurchase agreements monthly for up to a year, involving securities such as sovereign bonds, local government bonds, financial debentures, and corporate bonds. The bank executed 241.6 billion yuan in 7-day reverse repos at an interest rate of 1.5%. According to China's National Bureau of Statistics, the combined profit of major industrial enterprises fell by 3.5% year-on-year from January to September. The Bureau data also showed that the combined profit of industrial firms totaled to 5.228 trillion yuan. Profits in high-tech manufacturing rose by 6.3%, and consumer goods manufacturing profits increased by 2.4%, highlighting the resilience of new industrial sectors. Still in China, it has reiterated its warnings to the European Union, stating that separate negotiations with electric vehicle companies, while talks with China are ongoing, could shake mutual trust and disrupt the overall discussions. Both sides had clarified that the price commitments would continue to be the solution to the dispute, and stated that the next phase of consultations have begun. This comes shortly after China and the EU agreed to engage in further technical negotiations regarding potential alternatives to tariffs on Chinese electrical vehicles. Both sides emphasized that price commitments would remain central to resolving the dispute. India now, and the Reserve Bank has maintained its growth forecast for its economy to 7.2% for the current fiscal year ending March 31st. This forecast exceeds the target set by Prime Minister Narendra Modi and his government, which ranges between 6.5% and 7% of GDP. The central bank's expectations are based on its view that spending in rural areas is improving alongside growth in private investment banks such as Goldman Sachs, having lowered their growth forecast for the Indian economy to 6.5% for the current fiscal year. In the United States, tech billionaire Elon Musk has claimed that he can cut around $2 trillion from the United States government's federal budget if Donald Trump wins the presidency. Musk was laying out his vision for government spending cuts in case Trump wins. Trump has said that he would ask Musk to head up an effort to cut government spending, nicknamed the Department of Government Efficiency, or DOGE, a reference to a cryptocurrency Musk has embraced.
And out of your pocketbook. You're being taxed. All government spending is taxation. So whether it's direct taxation or all government spending, it either becomes inflation or it's direct taxation. Your money is being wasted, and the Department of Government Efficiency is going to fix that.
Perhaps that should have been doggy. On another note, the German government has urged Volkswagen to protect jobs after Labour leaders at the company said that the German carmaker plans to eliminate tens of thousands of jobs. Volkswagen will also shut at least 3 plants in Germany for the first time in its 87-year history. Volkswagen last month cancelled a 1994 agreement that protected its workers from layoffs until 2029, enabling business-related layoffs from mid-2025. Now, here in the MENA region, President Abdel Fattah el-Sisi has met with Eni CEO Claudio Descalzi and senior executives to discuss enhancing economic partnership between Egypt and Eni. Descalzi praised the Egyptian government's efforts to create an investor-friendly climate, highlighting Eni's commitment to expanding its role in Egypt's energy sector, which presents significant opportunities for local production and export. President el-Sisi emphasized the importance of the Egypt-Eni relationship as a reflection of strong Egyptian-Italian cooperation. He reiterated the government's dedication to improving the investment landscape and maximizing benefits from the energy sector. Egypt's Alcan Auto Company and Chinese BAIC Company signed an agreement to establish a factory to produce electric cars in Egypt. The factory will begin production at the end of 2025 and will be built on an area of 120,000 square meters to meet the needs of the local market and export to the Middle East and African markets. The project is scheduled to produce 20,000 cars in the first year, so that the production volume will reach 50,000 cars by the end of the 5th year. The local component of the project is 48% and is targeted to increase to 58%. The project will provide around 1,200 new job opportunities. According to the Central Agency for Public Mobilization and Statistics, the trade exchange between Egypt and Algeria reached $622 million in the first 8 months of 2024. That's compared to $563 million in the same period of 2023. In recent years, trade has consistently grown, with total exchanges amounting to approximately $1.2 billion in 2023, and a 15% increase from $1 billion in 2022. Egyptian exports to Algeria reached $605 million in the first 8 months of 2024, up from $556 million in the same period of 2023, while imports from Algeria rose to $17 million compared to $8 million last year. This development coincides with the Algerian President Abdelmajid Tebboun's visit, in which he stated that he supports the country's economic cooperation across the energy sector. More about trade relations, as the Saudi Minister of Economy and Planning, Faisal Al-Ibrahim, announced that the volume of direct Emirati investments in the kingdom has reached approximately $30 billion. Al-Ibrahim stated that during his speech at the third Saudi Emirati Economic Forum that the trade between the kingdom and the UAE has increased by 25%, reaching 113 billion riyals. The value of non-oil foreign trade between the two countries reached 137 billion dirhams in 2023, while non-oil trade exchanges between them amounted to 75 billion dirhams in the first half of 2024, achieving growth of over 18% compared to the same period in 2023. The Indonesia Investment Authority has announced an investment in the Trans-Sumatra Toll Road, which is valued at $1.4 billion. This initiative is backed by key global investors, including a subsidiary of the Abu Dhabi Investment Authority and Dutch pension fund APG. This partnership is part of a broader strategy to enhance Indonesia's infrastructure with previous investments made in the Trans-Java Toll Road. Overall, the investment platform aims to mobilize up to $2.75 billion for various toll road projects across the country, reflecting a commitment to boosting Indonesia's connectivity and economic growth. Israel's Ministry of Defense has announced a 2 billion shekel equivalent to $530 million allocation to accelerate the development of the Iron Beam laser air defense system. This system is aimed at intercepting drones and projectiles. The system is supposed to allow the Israeli occupation army to intercept drones more effectively, especially those launched by Hezbollah towards Israel since the start of the war in the Gaza Strip. Meanwhile, a study conducted by the Watson Institute at Brown University has revealed that 70% of Israel's military expenses for the current war have been funded by the U.S. Treasury. The research indicates that total U.S. funding for Israel's war efforts has exceeded $22.7 billion. This amount includes American military aid sent to Israel since the onset of the conflict, as well as costs associated with U.S. military operations, such as the deployment of fighter jets, destroyers, and aircraft carriers to the region, along with the establishment of air defense systems in Israel. Commodities now, and oil prices fell almost $4 a barrel after Israel's strike on Iran, with both Brent and U.S. West Texas Intermediate crude futures reaching their lowest levels since October the 1st. Brent was trading 5.43% lower at $71.92 a barrel. U.S. West Texas Intermediate dropped 5.63% to $67.74 a barrel.
Oil prices dropped sharply as markets responded to Israeli airstrikes on Iran over the weekend, which avoided critical energy infrastructure. The strikes, which targeted military facilities rather than oil and nuclear sites, reduced fears of a major supply disruption and signaled a possible de-escalation. However, demand uncertainties loom, particularly with weak industrial data from China, the world's largest oil importer. As China's economy pivots toward domestic spending and green initiatives, demand recovery may lag, complicating the outlook for oil. Analysts say the carefully chosen targets eased immediate concerns of a larger conflict, helping stabilize market sentiment. However, global demand uncertainty persists, particularly with weak industrial data from China, the world's largest oil importer, which reveals potential economic challenges. OPEC Plus is closely monitoring these developments and may adjust its production strategy if demand continues to soften. With added uncertainty from the upcoming U.S. election, which could impact sanctions or trade policies. Oil markets are poised for a complex and potentially volatile period ahead. As multiple pressures weigh on the market, the path for oil remains uncertain.
On the line now to discuss the latest global economic developments in oil sector is economic expert Dr. Zeina Mansour. Welcome to the Qnews Economic Bulletin. What is the current level of the conflict risk premium in oil prices, and how might this change further?
Good evening. The part I heard from the question was in relation to the oil prices. There were major risks represented in the two wars in Ukraine and in the Middle East. The increase of the political risks led to the increase in the risks also regarding the prices of the oil barrel. But after the Israeli response to Iran, the price became $75. And OPEC and all the organizations of countries producing oil could absorb these risks and control the oil price. But the Middle East region witnesses a lack of geopolitical stability and possibility of wars, which will make us facing changes in the price of the barrel of oil. And after these factors end, we will return to the fixed factors of the market, which are demand and supply.
And beyond the geopolitical situation, are there other factors that are driving oil prices now?
Naturally, the factors affecting the oil price are the geopolitical factors. Second, the supply and demand process among the producers and the consumers, and the most important consuming economies are China and India. We know in the Chinese economy there is a kind of a slowdown and reduction in the demand, and in the international economy there is an increase of the supply of oil. That's why the available amounts at the level of the supply are higher than the levels of demand, in addition to other influential factors, including the international rate and interest rate that affects the flow of cash and the investments. And despite the fact that there is an increase in the investment of the fossil fuel, the interest rate from the US Federal Bank affected the economic factors at the level of the macroeconomy. Returning to the topic of what happened in the Middle East in the recent days, the geopolitical factors were the major, and the OPEC and OPEC Plus managed to absorb these alerts and these risks and conduct a balance and changes and amendments in the prices and in the supply and demand in a manner that goes in line with the major economies in China and India and in the European square and the Asian square, in addition to the oil investments in the US market and the reoperation of the oil refining establishments, in addition to the addressing of economic slowdown, inflation, and providing more job opportunities in the US economy.
Okay, and also can I ask you, you mentioned China's economic slowdown and that's impact on oil demand. Do recent Chinese stimulus measures show potential to boost crude consumption?
I apologize, I couldn't hear the question clearly. Can you repeat it?
Okay, you mentioned China's economic slowdown impacting the oil demand. Do the recent Chinese stimulus measures, could those have a potential to boost crude consumption?
Yes. Regarding the part I could hear from in the question in relation to the crude oil and the fossil oil, the prices are stable between 70 and 75 dollars, and this is a manner of absorbing all the geopolitical turmoils in addition to the elections. Until the elections are over, we will face some kind of vagueness and uncertainty starting from the time of the elections on November 5th until the 20th of January. In this phase, we will witness some changes in the prices of the barrel of oil and the barrel of Brent. All of these things are absorbed within a process of balancing between the demand and the supply and increasing the supply. All of these things are there to absorb any geopolitical or political shocks or any changes in the international market to maintain the stability of the price of oil barrel at the level of 70 and 75 dollars for the crude oil Brent.
And could I ask you, do you think that the US election could impact oil markets, especially perhaps in terms of sanctions and trade policies with Iran and other oil exporting nations, depending on who gets into the White House?
In relation to the Iranian developments, there was a real concern at all levels, political and economic level, that the Israeli-Iranian confrontation and the targeting of oil locations or nuclear establishments would lead to an increase in the price of oil. This is beside the sanctions that have been imposed on the Iranian economy for years now, and the resulted reflections on the oil market. All of these factors represent pressure on the price of oil barrel. But I'd like to reiterate that the management by OPEC Plus absorb all of these variables and all of these transformations. It also tries to absorb all the resulted risks from the stop of the supply chains, especially the supply chains that were cut, because any disruption in the supply chain would increase the price of the oil barrel, in addition to the sanctions on oil producing nations, including Iran, that tries to use the black market or the parallel market to escape from the sanctions. But all of these things shows that the cautious policy followed by OPEC Plus was important to manage the price of the oil, in addition to the pressure practiced by Washington to prevent a dramatic response at the Israeli conference on the night of the Iranian elections. All of these things participated in the stabilization of oil price, beside the other factors, including Shukran Gazilan.
I'm going to have to end it there because we've just out of time, but thank you so much for your insights there, Dr. Zainab Mansour, our economic expert. Now, gold prices fell as investors await US economic data for fresh insights on future Federal Reserve's monetary policy decisions. Spot gold fell 0.5% to $2,732.98 per ounce. US gold futures declined 0.3% to $2,745.10. Now, most global shares traded higher today as markets await key economic data from the United States as the elections approach. In the United States, the S&P 500 was 0.5% higher, the Dow Jones Industrial Average was up 0.6%, and the Nasdaq Composite traded 0.7% higher. In Europe, France's CAC 40 traded 0.7% higher, while Germany's DAX rose 0.5% and Britain's FTSE 100 added nearly 0.2%. In Asia, Japan's benchmark Nikkei 225 surged 1.8%, South Korea's Kospi edged up 1.1%, and Hong Kong's Hang Seng added less than 0.1%, while the Shanghai Composite rose 0.7%. Boeing has announced on Monday that it launched a stock offering aimed at raising up to $22 billion as the company seeks to improve its finances, which have been impacted by a month-long workers' strike and ongoing safety issues. The offering includes 90 million shares of common stock and $5 billion in depository shares tied to convertible preferred stock. This financial move comes as Boeing faces significant challenges, including the halt of production for its popular 737 MAX aircraft due to a strike involving approximately 33,000 machinists that began in September. The company is also dealing with a regulator-imposed cap on its production of MAX jets following a mid-air incident earlier this year. Now here's a recap of today's key economic headlines. China's central bank announces the initiation of outright reverse repos. The Reserve Bank of India maintains its growth forecast at 7.2% for the current fiscal year. And oil prices fell almost $4 a barrel after Israel's strike on Iran. And that's all for today on our Economic Bulletin here on Qnews. Stay connected for more news and updates by following us at Qnews EGY on our social media platforms. Also, for real-time updates, you can connect with us on the UMS digital platform. Watch it. Thanks for watching.